Let's begin there with the impact of today's data. The drop in consumer sentiment caused by inflation fears and tariffs could be a real problem here for investors. Rebecca Patterson is former Bridgewater Associates chief investment strategist, currently a Vanguard board member and senior fellow at the Council on Foreign Relations. We also have our chief economics correspondent, Steve Leisman, in the house. Rebecca, the market very unhappy today. Why is that?
No, it's interesting. The 10-year yield tells you a story of this whole day and what could this whole year be like. After we got the payroll report, decent job number, not too hot though. Yields rose a little bit. Fed fund futures didn't move, so no need for the Fed to react. The sentiment report came out, bad sentiment, high inflation, 10-year yield goes higher, and now we start to see the market taking out Fed cuts this year at the margin. Tariff talk, same thing. And so what's worrying here is if we have tariff-related uncertainty or actual tariffs, and we have inflation expectations and actual inflation sticky or even higher, you're going to have higher 10-year yields for not good reasons. And that's the worst case for investors. You have lower stocks, higher borrowing costs. I'm not saying that is going to happen this year, but that's the little glimpse of what we got in today's trading action that I think is a risk for us to keep an eye on this year.
Are we putting too much on all these macro? I mean, could it be Amazon's fault, right? Look at the NASDAQ, Rebecca, and its underperformance and how poorly tech has done this year. We had big debate with Rich Bernstein last hour about whether it's time to get out of the Mag 7. And I mean, I don't know. I guess granted all that, the Dow is down 400 points.
I mean, I think you're making a great point. Macro and micro both matter. You always have to be looking at both and putting the bigger picture together. Again, if you think about the jobs data we had, but also some of the data out of that Amazon report. Yes, it disappointed overall, but they also talked about year-end activity being very strong. The U.S. consumer today is still very strong. And at the end of the day, that and the hundreds of billions of dollars that are coming into the U.S. economy from tech capex, these are important supports. But those are what is today and behind us. What we have to think about going forward, if the consumer, which is the engine of growth, if they get more cautious because of the prices of eggs or uncertainty around tariffs, and they start to pull back, it almost doesn't matter what Amazon does. I'm picking on Amazon.
Right.
But if the consumer pulls back, all bets are off. We're going to get lower yields because we're going to have a growth slowdown.